So I did everything you said. I started investing in real estate, and now I'm managing my rental portfolio like it is a business. So I feel that I am ready. I'm ready to expand, and I would like to know what's the best financing plan possible that I can take advantage, whether it's through an SBA loan or perhaps through credit cards. Is that the dilemma that you're facing right now and you're trying to find out which one will work out best for you? Well, if that's the case, you arrived to the right episode, because that's exactly what we're going to cover today. Hello everyone, and welcome back to another episode at Never Rise Invest. And if this is your first time tuning into this channel, well, let me tell you, this is your channel for real estate education. So just like I mentioned in the introduction, today we're going to talk about the advantages that you get from either applying to an SBA loan or a credit card, and use those funds, leverage those funds to the expansion either of your real estate portfolio or perhaps any other business that you might have. And to do that, we're going to go straight into my tablet. So, okay, in order to start with the comparison, we're going to draw the line, and we're going to do SBA and credit cards, particularly commercial or business credit cards, right? So we're going to do business right here. And so what are some of the key considerations that you need to have before applying for both? So first is the credit, right? With the SBA, the way they're going to approach this, it's going to be based on your personal credit. So that's why building your personal credit, it's very important as a stepping stone for everything you do. So personal credit. Why are they leveraging everything based on your personal credit? Well, if you come to think of it, when you have a business, the business in itself doesn't really have a personality or a way of behaving or a credit history in itself. You build it for the business. So their belief or their rationale is that, well, if you manage to have a good credit history or an excellent credit history, chances are you're going to run your business exactly the same way. So you become, as an individual, you become the face of the company. That in comparison to a credit card, at some point you will still leverage your personal credit, because when a business is new, once again, it doesn't really have a personality, right? So they will highly leverage everything based on whatever you have built in terms of credit history under your Social Security number. But as time goes, your business will be able to build its own commercial credit profile, and that's done via the EIN number or the Dun & Bradstreet number. Eventually, as your business grows older and larger, you will start pulling yourself out of the equation, and then eventually the credit will be built based on your business. So every time you apply for a commercial credit card, they will start pulling the credit history based on the EIN number or the DUNS number. Now, in terms of application and paperwork and what's needed, right? In order for you to be able to apply for an SBA, you need to have at least 1 to 2 years of business tax returns, right? Tax returns. Why is that? Think of it this way. Applying for an SBA loan, it's like applying for a mortgage. They need to see that you are in fact truly running a business like a small business, right? They need to see that you're hiring people the way you're supposed to, that you truly are capturing the operating costs, and that any of the expenses actually go solely towards the business, because that's going to help them determine how much money to lend you. As opposed to a credit card application, the application is relatively simple. They don't require much paperwork because you fill that up online, right? So application is simple. You fill that up online, and do you have to be true to the matter in your responses? They can still check that the information is accurate or not. They do that on a random basis. They don't check every single application, but if they do check up on you, you better be able to produce that documentation, because otherwise they can either close your credit card line or they can just simply reduce the credit line that you have, right? And I just noticed that I went straight into talking SBA versus commercial, but I don't think I've gave you a definition and explanation of what the SBA is. So an SBA, it's a government cabinet basically that provide support to small businesses. So you can actually go to a bank and request to SBA loans, and those loans are actually subsidized by the government. And what makes a business a small business, right? So an SBA stands for Small business administration, right? Administration. So what constitutes a small business? There are a lot of definitions out there, but for the purpose of this episode in particular, we're not going to focus on the amount of money that you make. So if you are a company that makes large sums of money, you can still qualify because, hey, maybe you're looking to expand, maybe you're looking to create more jobs. But if you're relatively a small business, that's still okay, because their loans is going to be based on whatever you put in your taxes and your business case and all, right? So by definition, you are a small business if you have less than 500 employees, okay? So you can be making a ton of money, but if you have 50 employees, you will still qualify. It's anything under 500, okay? So now that we've gotten that definition taken care of, let's just get back into the tablet. So continuing with the application process, before you can hear back from the SBA, the application can take somewhere between 1 to 2 months, depending on how thorough you are with the documentation that you provide them. So if you have a great power team that already has all of that documentation for you, then the loan process can be fairly quick and it can take up to a week to get that. But for the most part, since most business owners are new to the process, it can take a bit of a learning curve for you to produce the right documentation. By that I mean gathering all of your prior year business taxes, creating a mission statement, a business plan for the next couple of years to come, so that way they can see that you're actually serious and that you're not simply looking to just get a loan and blow that money away, right? So you actually have something pre-planned in a way that, hey, it will give them a better understanding and what is it that you intend to use that money for. In terms of a credit card, the application process, the approval process is almost instant. You go online, once again, you fill out the application, and then they can give you an answer within 1 to 2 minutes. So it's instant, right? Moving along with the list, the amount of money that you can get from the SB loan is relatively large. So generally, you can get loans up to 5 to 6 figures. So you can easily come in and, you know, assuming you have everything in order, a good tax return, a good business plan, you can even get up to $5,000 or even up to the millions, right? So it's a one-time application. Because they are thorough, they can actually borrow you a little bit more money. So just think of it as a mortgage application process, right? You're about to buy a house and the banks will typically just have to scan your life away because they need to make sure that you can truly afford to repay this loan. In terms of a credit card, because it's an unsecured loan, they don't know who you are, everything is based on trust, and that trust is based on your credit history. They're not gonna give you a credit card for $500,000. So what they do is that they start with small sums of money. So you can get approved, let's say for $2,000. Eventually, if you prove that you're credit worthy, you can get $5,000. Then eventually you can get $10,000, and that way you continue to build more and more credit. So for the most part, instead of having one credit card with large sums of money, what you wind up doing or having is a bunch of different credit cards that could amass to a larger sum of money. So moving along on the list, right? So we have the next thing, which will be business interest rates. So we were number 4. So number 5, in terms of interest, the interest rates that you will get on the SBA loans are relatively low. So we're talking about something that's comparable to the market prime. So you can get somewhere between, I don't know, 3.99%, 2%. Their rates are relatively really low because their loans are actually amortized. So like I said, they do run like it's a mortgage. So let's say, for example, if you get approved for an SBA loan and your monthly payments are $500, for the most part, a big chunk of that payment is going to go to interest. In this case, let's say, for example, $400,000, and then the remaining 100 could be going to the loan. That, in comparison to a credit card, is very different because what they have are simple interest, and that's why you see rates that could range easily from, let's say, 15% all the way to 24.99%. 6%, because those interests are actually simple and they're also based on smaller sums, $2,000, $3,000, $4,000 versus here we're talking about $399 on $500,000, right? So very different in terms of interest rates. And as the name calls it, these are loans, right? And anything that it's a loan has a set date for the loan. So we're talking about loans that could last up to 15 years, 20 years, sometimes even 25 years, right? So these are loans that are meant to last a long period of time, kind of like a mortgage, right? But in terms of credit cards, the term of those debt, I guess, it's revolving. So think of it as a revolving door. And let's say you have a credit line of like $10,000. So as you spend that money, you pay it down, your credit line goes back to zero, and then you use $5,000, you pay $5,000, and then you go back to zero, and then you have $100,000. And you can do this for as long as you want, right? So revolving. But here, with the SBA loan, you get approved for a one-time deal and you have this amount of time to repay it, and once you pay it off, the loan, it's closed, right? It's not like you can have access to that credit line again and have that capital readily available. No, you will have to go through the entire application process just so you can qualify for either the same amount of money or perhaps even more or perhaps even less. So now, the next key difference, right? But before we do that, if you're enjoying this episode and you're finding this information very useful, do not forget to hit the like button right here so you can help this video rank and help others like you who are looking for information like this to expand their real estate portfolio or their business. So now back to the list. The SBA loans tends to have more flexible payment arrangement. So let's say, for example, I recently got approved for one under the CARES Act, and let's say I got approved for the loan on September 2020. So under this plan, I was given a defer payment option. That means I can choose to accept the money today in September 2020 and not pay anything all the way to September 21. So they do this in order to create flexibility because they understand that eventually once you get approved the money, you're going to be busy on the expansion mode. Sometimes it's a hit or miss. You could be positive in 1 month, but you could potentially be negative in the other month. So they're taking that stress away from you by helping you defer those payments all the way to the following year. Granted that even though the deferment takes place, that doesn't mean you're not going to accrue interest as you go along. So if you choose to make the first payment 1 year from today, just keep in mind that the interest rates are going to continue to accumulate over the next 12 months. So in the end, you'll wind up paying more money. But hey, if you don't have the option right now, you truly need that liquidity, it is an option that you have right now. With the credit cards, you don't get that defer option. In fact, if you start making the payment, you will already fall into the delinquent category. But one thing you do get with credit cards are introductory offers, right? So, and what do I mean by that? So those introductory offers where they offer you a 0%, that's why I talk about 0% credit cards all the time. So with one of those credit cards, you can get an introductory offer of 0% for 6 months. Sometimes you can do it for 12 months. And if you're really lucky, you can get them for 18 months. So what that means is that, let's say you have a credit card and you used up $10,000. So they're going to give you 12 months to pay the debt free of interest as long as you pay that all under that 12-month period. It is not a deferment, but it allows you to take care of the debt without having to worry about interest rates. So going down the list, for both, because these are business loans, you will need legal entities in place. So I'm talking about potentially a corporation or an LLC or a limited partnership. Depending on the entity that you, your accountant, and your attorney had set up, you have to make sure that these are maintained in an orderly fashion. So that way they can see that you are in fact serious about getting things done and that you're truly running a business. Now, going along with the list, I am listing it because I know I have followers from all over the world, thank you very much, who are looking to come into the US and invest. And it will be very likely that you could ask me this question, and it's, what's the immigration status? Do I need to be a citizen? Do I need to be someone who legally resides in the US? What's the requirement in terms of immigration? So I am sad to say that in this case, the SBA, it's only available for US residents or citizens. But in terms of credit cards, it is a bit more flexible because you can still build business based on your ET number, on a personal level, but at the business level, you can build your credit on the EIN number, and that in itself would allow you to get access to more credit versus the SBA, which will require citizenship status because it is meant for U.S. small businesses. And lastly, for those who are ready to move forward and pursue, how can you get a hold of the SBA, right? One, you can just simply walk into your local banks, right? And then just ask them if they have any SBA loans available. Or you can just simply go online to the SBA website and you will find a listing of all the banks, the participating banks that are offering the SBA loans. You cannot just walk into the SBA office and request a loan. All the loans are being administered by the bank because they are the ones in charge of qualifying you. They have to look at your credit report. They have to see if you're credit worthy and if your business is generating sufficient income to do that. And that's not something the SBA will do. You have to go through a bank. And same thing for the credit cards. You don't even have to go to the bank. You can actually do an online application through the bank website, but both type of finances are being administered by the banks. So it's pretty much it. That's all I have for you today. Hopefully you found the content valuable, and while I still have you here, do not forget to check this episode. That's going to help you complement everything you just learned today. I will talk to you soon, and until then, take care. Bye-bye.